All right, good afternoon, ladies and gentlemen, and welcome to Startup Innovation Forum 2024. My name is Lorene, and it is my pleasure to be your MC for this afternoon. Now, Startup Innovation Forum, or SIF for short, is the largest additive manufacturing and sustainability pitching event in the Asia-Pacific region. Organized by the National Additive Manufacturing Innovation Cluster, or NAMIC, SIF provides a platform for startups to showcase their solutions and applications using AM technology, building and catalyzing the growth of additive manufacturing in Singapore and beyond. Now, this year will mark SIF's 5th edition and my 3rd year hosting for it. Hooray for me too. And it's wonderful to see many familiar faces and, of course, new friends here with us today. Now, in today's lineup, we will engage in a fireside chat exploring the deep tech ecosystem in Singapore with our industry experts and leaders, as well as hear from our 11 startups at the pitching session later on. So without further ado, let's kickstart the program today by taking a look at the startup scene. Now, Singapore is known as one of the cities with the best startup ecosystem. Now, according to my research on Startup Genome as of today, Singapore ranks number 1 in Asia and 7th worldwide in the global startup ecosystem ranking. Now, amongst its verticals, we have deep tech, or what I like to call it, extremely difficult. I don't know why I'm doing this tech, which most of us happen to be in. But it's as grilling as it is critical, as deep tech is crucial in solving many of today's global challenges. Developing the deep tech ecosystem is now more important than ever. So for today, let's explore the topic on is Singapore on the right track to grow deep tech, in particular science-based climate tech and biotech companies with global impact. So joining us in the discussion today, we are pleased to welcome Donna C. from CEO of Super Youngs, Julia Milleray, operating partner at Rerezo, Sarah Ebersuela, founder at Hex and general partner at SOSV, and moderating the discussion today, Dr. Cheong Yang, Vice Provost, Strategic Research Partnerships at the Provost Office of Singapore Management University. Ladies and gentlemen, here's where your applause.
Thanks very much. Thanks everyone for showing up for this as well. So I think we have an interesting topic today that I think is an issue that all of us probably as part of this ecosystem is really interested in, which is a simple question of actually whether Singapore is on the right track to grow deep tech, science-based climate tech, biotech companies with global impact. We have with us a very distinguished panel who actually firstly have deep experience in this space, both in Singapore as well as in other jurisdictions, and who can then compare what they find in Singapore as well as what they have found in other places. So maybe I'll start off by just asking them to do a quick introduction about what they do, rather than for me to mangle your introductions, and then maybe to actually talk a little bit about the experience you have working in the Singapore ecosystem. Just a 1-2 minute pitch each. Maybe start with you, Donna. Yeah.
All right, I'm going to make this super quick and speak in bullets. So Donna C., founder and investor. So I've had both perspectives, US, Singapore, all deep tech, mostly biotech and life sciences. So over to you, Julian.
Hi, everyone. If you can hear me. So hi, everyone. It's really good to be back. It's probably maybe 5th year and at least 3rd without COVID. So it's really nice. So delighted to be back. I'm Julian. I've been in Singapore since 2016 with a company called Eurazeo. Eurazeo is an investor in private companies globally, including here. And we straddle multiple asset classes, which are always private companies. And I'm focused on the venture capital side of things, deploying a fund which we raised called Smart City Fund, which invests in decarbonization, climate, and sustainability across 4 verticals, which are transportation, the energy sector, the built environment, manufacturing, and logistics. So pretty hard to abate sectors. And we are supported by many corporates, including in Singapore, Singapore Power, SMRT, and I'm responsible for investing in this region. So deep tech is something that my colleague Ernest is actually probably even more qualified than me to talk about. He's not here today, unfortunately, because he started Hello Tomorrow conference here. We do look at very early stage companies, but we do typically like to invest at an inflection point where there is product market fit. So we need to come in early, but we do groom companies until they're investable for us, which is usually at that stage. So I'll talk more about that today. Thanks for having me.
Hi, everybody. My name is Cyril Ebersweider, and I'm a general partner at SOSV as well as the founder of Hacks. I've been a VC for about 15 years now, and SOSV is an early stage investor that invests globally into deep tech companies, so life sciences and hardware. And the way we do that is that we've set up certain programs, one called Hacks and another one called IndieBio, which are targeting startups that are just coming out of research, essentially. And then we help them go to market with labs and resources that are stationed in San Francisco, in New York, as well as in Shenzhen. We have invested in over 800 companies to date, have about $1.5 billion in AUM. And Singapore has taken actually an interesting place and more important place over time. I'm stationed in Singapore. I've been stationed here for about a couple of years. But it's been one of those ecosystems that I'd say punches above its weight, and I guess we'll talk about that. But we've made numerous investments in the country over the past 4 years here.
All right, thanks very much for your quick intros. So you can tell that we actually have a panel that spans actually the world, experience in China as well as the US. Donna is experienced in the US as well, and of course, experience in Europe. We actually had one more person with experience in Australia, but unfortunately he's stuck in Dubai and couldn't make it. So we were missing that perspective. But I think what will be very useful for I think the audience here is to understand what are some things that you might have seen in the various ecosystems you've operated in before and compared to what you are finding it in Singapore. And maybe what are some of the areas of unique positioning? I think you mentioned some of those things maybe as that's growing importance for what Singapore could do, and so that people can also think about, in terms of the type of startups that they might want to try to grow in Singapore, what might that look like? The sort of like the thinking around product market fit resonated with me a lot. I was 5 years at the National Research Foundation as a deputy CEO. We funded basically all the research across Singapore in all the institutions, A-Star and everything as well. And of course, one of the things that we realized is that you have a technology, but you haven't figured out the market, you haven't figured out the business model, you haven't figured out a payer, nothing scales, right? And nothing actually enters. So the business model, the product market fit, understanding actually what the needs are and who is going to pay, I think are really critical, because that itself, in a way, guides how you might even develop the product. So recently, I had a good fortune of going to a trip to Boston. I spoke to, I know MIT because I was an MIT alumni. So there's obviously the approach of building a product, then trying to figure out how to pitch and where to sell it, right? But of course, I went to Harvard Innovation Lab as well, where they say that you pitch, you give me an idea, you raise money, and then you build a product, right? So the question maybe I'll pose back to you all is that in your own experiences, what do you feel is the right approach, or is it a mixture of the two, or is it which has proven more effective in your own experiences in terms of what you see? And finally, of course, maybe how does that link back to what we are doing in Singapore and how we could improve that?
Yeah, thank you. All right. So I think the answer is it depends, right? So it depends on, so your question, just to restate the question, I think, because there was a long introduction, I'll just say the question I'm trying to answer is, when you're thinking about building a company, what are the considerations, right? And so I think it depends on what you're building. And one of the cardinal rules for me, wearing either the founder or investor hat, is to be close to your customer. And so one of the challenges, therefore, of building a company in Singapore is, where is the customer? It's not just on this island, right? So if you're building a product in Singapore, then ideally your customers would be in ASEAN, right? Or in APAC. And I think, just to answer that question concretely, and maybe I'll turn it over to others. I could speak longer, but yeah, go ahead.
So to answer maybe again the same question, which I would kind of frame as what works and why? Well, first of all, I think VCs are really not usually very good at predicting things. And so our best bet is to work behind founders who educate us and we learn with them. And at one point, we feel we can bring things. So I think it's always important to understand that we are investors. And we are partners to entrepreneurs, but we're certainly not the driving seat. In the space that we're talking about today, I think the most important thing to consider right now, in my view, in terms of what works, is that it's super important to understand time frames. This is a long haul. And so when we're looking at deep tech, we're usually adding at least 2 to 3 years to product market fit, sometimes 5, even more. And so where you decide to start your company has a direct impact to reducing or prolonging, making even longer that time frame. If I take a step back in this region, the last, I would say 2010, 2020, it was all about what are the needs of the consumer in ASEAN. So trying to find solutions and products that serve this region and that also help people access new services and drive people out of sometimes poverty, which is the main goal right now. So deep tech and hard science, it's a hard sell in this ecosystem for that period, right? 2010, 2020, it was very difficult to lift companies, to find the talent, to find the investors, even to find, as Donna was saying, who's going to use it as a customer. So now we're in a different time. We're in a different time because either there's problems that are so hard to tackle that we need the hard science more pressingly. So that's, for example, on the climate and decarb side. So there's willingness for people to test solutions that are sometimes more radical. So that helps. The other thing is that there is also an understanding that there was maybe a little bit too much money that went to these kind of general products and that we need to allocate to what Singapore can do best as well, which is there's a huge talent pool of very, very smart people here, knowledge economy, and that we can leverage. So I'm giving you this answer, which is a little bit long, but to say time matters because for 10 years in ASEAN to build those companies was difficult. Now is actually a better time. It might be an even better time in other parts of the world where there is the talent pool, the market, and everything. So that's something that's really important to consider. And so long story short is I do feel that it is super important, and I've always said it for Singapore, that anything that is built here always has at least 1 or 2 legs in other markets. It's not, we cannot do deep tech for nation building yet. We do deep tech to solve problems, build teams, and bring products to market. And we do need to work with some bigger markets. So, and those bigger markets help us compress that time, which is the biggest issue in my view. So long answer, but hopefully.
No, a very complex question too. You know, between the ecosystem and the relevancy of Singapore, and then every startup is different as well. But I guess one of the premises of the reason why I built Hacks, which was built in Shenzhen, right? Was to be a contrarian, essentially. You are an economist, right? You have a PhD in economics. So, Milton Friedman, the world is flat, right? And I always, found out that as soon as I went to Shenzhen, essentially, I thought that the companies that will go over there that were building hardware at that time, back in 2010, will actually be immediately augmented by the ecosystem. And that was the first time that it became apparent to me that actually an ecosystem can boost a company for real, like your valuation immediately, or at least the easiness of getting to your valuation or to build your product to be more concrete was augmenting. And just because you were there immediately, you had access to the suppliers chain, the experience, the flexibility, all sorts of stuff, right? The same thing is true. Typically, people will say in the Silicon Valley, of course. And I got to spend some time in Boston, and Boston had some of that vibe as well, but not entirely as much as Silicon Valley had. So Shenzhen was really the first time where you go to an ecosystem which is actually you could not tap into the financial ecosystem there because it's local and as a foreigner very difficult to tap in, and very few did. As a market, somewhat relevant, of course, if you can do it. Most companies were not able to do that, but they leveraged the ecosystem as a whole in a different way. And so So I was like, okay, I'm pretty sure other ecosystems like that will start to pop out, right? And I think that's what we're seeing at the moment. The competition between all the ecosystems worldwide is huge. If you are an entrepreneur, you have the choice to go to so many places that will literally throw money at you. It's pretty amazing. The other day I was chatting with your favorite competitor, which is at this moment Saudi and UAE and whatnot. Nowadays, you can, if you even have the potential to have a contract with someone in the region, you can actually get a grant. And you don't even have to have your company over there anymore. So it explains how far it goes. Of course, other places, even like Ireland, are setting up 2 sovereign wealth funds to attract, agtech and climate tech companies to, use the infrastructure that is available. That's, all the beer and, all the vats and whatnot. And so sort of, changing the previous infrastructure essentially into a new economy ecosystem. I've been in Singapore for a couple of years. It's probably by far the most thought out ecosystem that has, lots of things in place that are excellent for startups. It's nothing new. Like it's started many moons ago, at least a decade ago, if not more. But finally getting to a point of sophistication and also a point of focus quite clearly on deep tech, which is why you are here today, and you came from afar, I think. We've invested heavily into deep tech companies coming out of local universities, in US and TU and SMU as well. And everything is there. But I think, as I mentioned, it's a big world now. And so to the benefit of the startups, I think, and in particular, anybody touching climate, and I don't know who's touching climate here, but either way, if you are climate, I think you are global from day one. But either way, if you're a startup, you're probably global from day one, either from a market standpoint or a product standpoint or a team standpoint or thinking standpoint anyway. Singapore will probably have a place in there. But so also does other ecosystems. And so that's the complexity, I think, of startups today, is that being in one place for a whole time is, almost impossible.
Right. No, so all of you bring up very, very relevant points. And I think one of the things that we are wondering, of course, from the Singapore ecosystem is what else should we be doing, or how else should we be improving? I mean, you mentioned some examples of how maybe some of the infrastructure that's available for previous users are now repositioned and available for startups. Is that something we need to do more of, for example? We talk about the market access and the matching with the Southeast Asia, and so on and so forth. Is that the way to think about our role? Or is it like, should we think like the Saudis where, any company can come here, any sort of like a jurisdiction they can go back into in terms of the market? As long as there are people like you who know both markets, we can actually make those links. I mean, previously it was the case that you brought someone in here, they may not understand the other market. And then so it's very difficult for you to introduce one startup into another market. But because of maybe the geopolitical situation right now, Singapore might be a good place to start, but entering multiple markets, what do you all think about that as a proposition? And does it make sense, or are there gaps in even trying to think in that way? Yeah.
I have 2 very concrete suggestions. I think those of you who know me, I've been in Singapore for 5 years and worked very, very closely with Singaporean founders, including now I'm working with a group that is literally just, I think, almost too early to spin out, but they will be spinning out. And one of the things I have noted compared to other ecosystems is that there's a relative dearth of what I call, non-dilutive capital. It's, the US has their SBIR fund, which is, 1 to 2 billion, depending on the budget. And that is really a lifeblood, the first lifeblood for many young companies that are getting started. I was speaking with the CEO of Syngenta. Syngenta. Okay, I'm not sure how to pronounce it. The Australian company, and she reminded me that Australia has a very, very attractive R&D credit, right? So something up to 300% of revenues, or 44% of revenues. of cash, not tax credit. So what we do in Singapore is we give the MNCs the tax credit, the companies that have been making a lot of money and can actually pay taxes, but we don't give our young startups even the first 50,000 or 100,000 for free, right, as non-dilutive to spur their entrepreneurial journey. Canada is another company that the conversation reminded me that has a cash credit for deep tech companies, in particular in specific areas of strategic interest to the country. So I think I have mentioned this in other situations before.
But maybe just to check,
Yeah.
because obviously there is things like seeds, and there is actually the
Yeah,
startup
but
SG grants for the startup companies. Those
Yeah.
are non-dilutive as well, isn't it?
Well, I believe that some portion is non-dilutive, but also some portion is taken in a convertible note, right? So.
So I mean, there's a
think-
range, right? I
Yeah.
think
That's a different, convertible note is still equity.
but I think
Yeah.
grants can go up to 250,000 or more.
Right, but they convert
Okay.
on financing into.
For the
yeah.
higher quantums.
Yeah, so this is not free money. This is
Right.
very different from free money. What we call free money is founders, right?
Right.
And that even that's okay,
Yeah.
to convert into a convertible note later.
Yeah.
But the issue is the time to
Yeah.
apply, the requirements for reporting, and the financial reporting as well, which is very strict, relatively speaking to these other jurisdictions. So if you're a deep tech entrepreneur and your market is in Southeast Asia and you encounter a lack of this non-dilutive funding, where else should you go? That's the question, right? So that's one very specific commentary / suggestion. The second is that, and this is something that, in trying to attract, and this is the Singapore angle, right? So as a Singaporean, one of the reasons I came back to Singapore was to bring, to try and help, do my part in helping to create Singapore as a node for Singaporean entrepreneurs to come back or to flourish as they start their careers here. And so one thing that I'm very interested in, if anyone else is interested in, is setting up a special vehicle for Singaporean entrepreneurs. So I've met Singaporean entrepreneurs who went to Boston, to Oxford, to Korea, Japan, to raise their first dollar because they couldn't find that money here. And why do they have to go so far away to find that first dollar? And ironically, when they look to raise the first dollar, where do they come first? They come back home because that's who they know. The folks that they went to school with, to NS with, that's their network. And the few that were able to raise a single dollar in Singapore, they always remember. These are the people who gave me my first dollar, right? And for a first-time founder, young founders, even serial founders, right? I'm looking at this guy who I met, serial founder. You always remember who gave you your first dollar. That's just the way it goes. So anyways, 2 concrete suggestions for Singapore.
Okay. So I guess try and join what you have said with maybe the fact that you have to be in the market to know the market and so on and so forth. I did wonder whether part of it is actually, yes, Singaporean entrepreneurs, but they are maybe in the right market with some links back to Singapore for some of the initial, but also raising money in the market that understands the market enough to actually want to bet. Because I think one of the things that I would guess is that people down here probably don't, okay, you talk about market in the US, but I don't know the market, why would I put more money in? Of course, if I know you, I may, but that's like 50,000, 100,000. Beyond that, it becomes difficult. So I did wonder whether part of it is actually having a way to network the people here, as well as the market they might actually want to go into, and think of each startup as paired with some other external market that we are already thinking of entering them into. Like for example, if it's hardware, Shenzhen, some sort of pairing with Shenzhen may be necessary because we did look at Shenzhen at some point in time and realized that we will never match Shenzhen. There's no way we can catch up with Shenzhen. So let's not fight in that area. Let's see if we figure out whether we can collaborate. Now, of course, even in Europe and so on, it might be that there are big companies that you know there that could be part of the end-to-end plan for those companies. But since you know them, making the introduction for people here means that actually it becomes much more investable. Maybe I'll put that as an idea and then I'll ask Julian and Sarah to see what you want to say about that.
Yeah, sure. I'd have, again, 2 very specific recommendations as well, very concrete. Again, to elevate this, but as a preamble, I would say it's clear that Singapore is definitely punching above its weight already. I mean, the number of things that have been done already to try and foster the ecosystem. What we could do better and more. First is I've been very impressed by the results of sending Singaporean students to universities that are in big markets, deep markets, the US, China very early. I've spent time with students in SMU, and I was always amazed one summer when students from Jiangsu were coming here and they were saying, oh, I'm coming for the summer, but I'm also an entrepreneur and I'm using this time to kind of advance my company. And then I had friends, sons from Singapore were saying, oh, I'd like to maybe go to mainland China, but I'm not really sure. So I'm starting with Hong Kong as a buffer. And I'm like, just go directly, right? So I think it's very important for the talent pool here very early on to realize what it is to be in a big competitive market. And that's one thing. It is going to help them when they launch companies to think at a scale that I think is important and required. And it's helpful. That's first. And the second is, I've always taken the view that in the DTEV space, we should separate it from a nation-building effort, in the sense that my second kind of recommendation is that Singapore should really double down on what its big asset is, which is the desirability of living here and setting up here. And it means that for entrepreneurs in the deep tech space, they should be allowed to start their company here, get a lot of support without any kinds of preconditions, that they could start the company here, incorporate it here, not have any specific requirements around putting the IP here, team members here, no minimal. They start the company here, they benefit from a certain number of advantages. If in the life of the startup or their scale up, they need to shift resources elsewhere, they should, because it's ultimately at the end, they will most necessarily or most logically at one point reshift some of the talents, some of the assets back to Singapore. It could be out of gratitude, it could be out of their own comfort, but it can also just be that they're so big in, let's say they incorporated in Singapore, they became very big in the US. Now they're addressing Asia market, they already have a Singapore, they're going to put all the resources there. So I think there should be absolutely no barrier or conditions. They should be supported as much as possible, and I think ultimately it will pay back over time.
Yeah, and there's a bit of schizophrenia between the Singapore ecosystem for Singaporeans, and then having others come in, right? It's just because they are going in opposite directions essentially.
Yeah.
And so I concur with that. The two comments, like it sounds like from a Singapore-based startups companies already there, or want to be anyway. It's always about, and you will hear that many times around, the talent that people are looking for and complaining about in various ways, which have some ground sometimes, but often not really, I think. But the question is about risk-taking and about unicorns, I guess. Maybe there is also a bit of Singapore doesn't have a deep tech unicorn. The rest of the unicorns are more like regional founders, put it that way, based in Singapore. And at the end of the day, we're talking about VC and we're talking about startups, and we're talking about something that needs to be like a landmark company that everybody's waiting here. And I think the one thing that isn't been done at the moment, and so that's the suggestions on the Singaporean side, is about the fact that most entrepreneurs that are currently building or have built a unicorn, the average age is about 42 or 43, so much older than students coming out of university and making it up, right? That's all unicorns, and I let you imagine what it means for deep tech unicorns as well. And I don't have data about that, but I can easily imagine that they're not students coming out of university and building a unicorn overnight. And so it points out to what was mentioned earlier, and in one, grabbing the talent outside, the coming back from wherever they were, because they've seen it all, or they've seen some of it, and they can sort of match up very nicely with what, Singapore has at the moment, which is ton of research at A-star, at universities, with a lot of I don't know if anybody has been around the block, but it's very impressive facilities and research, and there is also envy to share. And so now we also need to build a ways to share, between the highways, right, coming back from abroad into Singapore, or convincing the alumni of SMU and whatnot that are in their 40s that they should, go on and meet with the youngsters there at the PhDs and try to make something happen there. I think is important and interesting.
Can I just add one point? And it's going to sound a little bit strange, but one last thing, which I don't know if we can foster it with a direct, concrete measure, but I do think that Singapore needs spend a lot of effort on building science, and I think that's all great. But for me, the future is that we need to build creative industries in Singapore. If you think about where the best startup ecosystems are, there's a mix of science and utopia and creativity, which kind of blends together, which is pretty unique. People focus a lot on Steve Jobs, and he's true. There's many things he's done. One of the things that's very interesting about Steve Jobs is he was someone who's absolutely passionate about typography. This guy studied fonts. So there's it's clear that why you see the Apple product as it is, very minimalist, attention to this kind of point. He was passionate about it, right? And there's many others, and I think ultimately it's difficult to instill creative industries in Singapore. The arts aren't valued as much as in other big cities, and I think if we need to have a little bit more of that. There's really great founders in Japan as well. I'm looking to Mistletoe. You go to Tokyo, it's a vibrant scientific, economic, but also creative center. And that creativity, which also drives a lot of really interesting entrepreneurs and other ways of looking at problem sets. When you read, some of the luminaries in science, some of them are also very artistic, right? So it's a little bit of an outlying thought, but it's...
I just wanted to riff off of that a little bit. So I think that as we enter this, AI-enabled everything, I think the importance of the humanities and having human-centered AI-enabled everything becomes even more important, and the creative arts as well as the humanities play a very central role in creating a more holistic, both ecosystem as well as products and offerings. So just to double down on your comment about the creative arts or humanities, which we are very, I would say less focused on here.
Those are very interesting points. Again, we'll try to weave some of these things again. So I think we talked about the Singaporean entrepreneur as well as maybe even the talent from overseas. Maybe part of what we need to think about is how do we let the two communities mix with each other so that they can actually find mutual support and maybe even use each other's networks for greater sort of impact. And some of this maybe maybe I'll post it for you to think about is there a role for some of your various kind of VC/investors/ so on to be part of that glue that maybe brings people together. That's the first thought I have listening to what you say. Second thing, of course, is that indeed on the creative side, maybe it's not even just creativity per se, but the ability to think creatively and to actually look at things from multidisciplinary perspectives of actually what are you trying to do, what are you trying to solve, how are you going to go about solving it. I think one of the things that we're trying to do in SMU when we actually look at some of these sort of innovations is to actually not just look at technology, but to look at the business model innovation, financial model innovations, even the regulatory innovations that are necessary in order for a technology to actually see market and scale. We should be thinking about how do you account for value and actually measure economic impact and so on, so that the buyers will actually finally pay for some of these things, and maybe even understand the psychological makeup of the people who are going to use this, both at the company level, at the individual level, so that you are marketing you are building your product in a way that is going to be acceptable socially, so that you have a market. So of course, this in a way cover the 6 schools of SMU. We don't really have that much deep technology, but understanding these elements of a technology you're thinking about may be critical to ability to bring some things to market. But I wanted to pick up on something that actually Julian mentioned just now, which is that deep tech is like 5 years, 10 years, and maybe that's why the founders are 40 years old by the time they actually become famous, because it does take time to gestate some of these technologies. But how do we convince people that there is, we always say we need to have a gap funding to cross the chasm. that there is another cliff on the other side of the chasm, and it's not just a cliff into a plains and nothing ever comes out on the other side. You do some of this end-to-end kind of investing, but do we need more of that? Is there other ways for us to think about this? I think Hex and SOSV, you have a network of people who are potential sort of like trade sales and so on. Maybe that's not so much of an issue, but is that an issue in Singapore? I mean, we talk about SGX, for example, as an exit, but we all know SGX valuation is not great. There are attempts to try to improve it now in specific climate tech and energy tech kind of places. Do we need to do more? Maybe within that, I know I asked many questions, but so that you have a lot of opportunities to then respond to any part of it. I'll get some comments from all of you as well. Starting with Cyril.
Yeah, no, we still have problems with liquidity, like everybody here, and looking forward to have more companies buying, other companies. And in deep tech, it's it's a fairly viable and fairly relatively vibrant place, but with valuations that are still relatively also contracted compared to software, and in particular over the last couple of years. So, there is definitely a cliff, I think, for a lot of those climate companies or really hard tech companies that need to have a factory and then need another factory to prove the point, essentially. And so historically, which is not that far out, we were talking about 2 or 3 years out, those companies were raising hundreds of millions of dollars because, money was free, and then, that dried up over the last couple of years. And I think even then it was quite visible that raising from a VC, no matter the size, $100 or $200 million for building factories is not the model that is sustainable. And that's why we are seeing some of the companies fail, and others in trouble, like Northvolt, had to fire almost half of their employee or something last week, for example. And so for different other reasons, but sort of the same, like the financing and the goals are not necessarily all aligned. And so I met last week some interesting person in New York, actually, and what he was doing was putting together some sort of VC meets grants with the IRA, but also other types of grants, meets project-based financing, and debtors, and eventually private equity and VC as well. And so there is a new breed that is finally that has seen the gap. And people working on that. Hey, how do we get really at scale with some of those technologies, with players that anyway have to be linked to the government, and one part of the answer, unfortunately, about the stock market, which is a very different thing in a way, but of course someone will have to bear the stone on their back at some point, but you cannot do things without policies and without public support in climate tech. In deep tech, is much larger, but if it comes to climate tech, then you will need some large governmental support, I think.
Okay.
If we look at the 4 kind of steps in a startup which are critical, and what we're doing well in Singapore, what we're not, I would say, if we, from the earlier to the later stage, at the onset, I think Singapore, we can, to finance R&D, and I think we're pretty good. And for example, in France, we can get probably similar amounts as in Singapore, where so I would say it's not groundbreaking, but it's comparable to, I think, other ecosystems. So I think on the initial financing of R&D, and then the annual kind of tax credits you can get as you develop it, I think we're on par with many other, but we're not better. In the second step, which is getting the product market fit, getting clients, I think here we suffer because of lack of depth of market. And that's what I was saying, companies here need to have access to deeper markets very quickly. We shouldn't put preconditions, because deeper the market, the higher the likelihood they'll find an industrial, a corporate, or defense that will want to finance a POC. So I think here we need to do better in helping entrepreneurs go outside of Singapore or in the region. The third step, and it resonates with what was said on the cost of capital, once you have your product market fit and you need to industrialize, Here we clearly have a big gap, which is we just don't have a lot of good blended finance, so cost of capital is really high. Something I'm trying to work on, but we need to involve much deeper pools of capital, banks in particular, to want to offer schemes that are of mixed finance, and that's something that we lack as well. And then the last one, which is the exit, the liquidity. We've talked about SGX. It's true that it's an issue for sure, but the consequence of that is that investors today, when you meet them at Series A, they'll say, at least I will say to you, if you come to me, I will say, I need a backup, and my backup is that you have to be profitable. Because if you're profitable on a EBITDA basis at least, or net profit, then I don't need to be funding you in year 6, 7, 8, 9. You can continue to grow as a business. That's challenging because it means that over time you need to start changing your cost structure. So it's challenging, but that's the only realistic solution I'm seeing right now. For lack of exits or lack of M&A, then you need to be profitable. And how quickly you do that, the earlier the better. But that's kind of what I see in the 4 steps and where Singapore can do better, where it's on par with other markets.
Yeah. So maybe if I can quickly engage a little bit more on that before I let Donna speak. You talk about the blended finance. I mean, we talk about the SGX, but there is actually, like you say, some of these blended models now, some PE, some VC, and a mix of all these things coming together. I mean, there is actually a lot of PE activity in Singapore. Is that the way to think about that?
No,
no,
unfortunately not. I wish it was. PE will ask you to be profitable usually before they put their money in. So it's challenging, and so it's a chicken and egg. So what is missing? I'll give you one example because I think it's interesting what they're doing. There's a bank, very large bank called Natexis, and they have this branch called Mirova, and they have a fund here. So I think it's 300 million, willing to put debt, provide credit, 10 to 50, 30 million checks, really at a pretty early stage for companies where they have a product market fit, but they still need to, get more equity and much more debt. There's really a gap if you want to go and get between 10 and 100 million of debt in this region. It's really hard. That's the real gap right now. There's very few banks providing it, so that's an issue.
They need sales, they need sort of like assets that can be collateralized and so on, which is then almost impossible.
Yeah, I'll give you one example. It's to the point that I've just invested in a company in Indonesia, and the founder wanted to put 3 million more on the Series A, and I said, "Why do you need this?" She said, "I need to buy my building or my where the office is." And I said, "Why do you want to do that?" She said, "Well, so that I have collateral, so I can go see a bank who's going to give me 8%, because if I don't have collateral, I can't do anything." And we said, we're not going to give you 3 million equity for that, sorry. But that's just to give you the depth of the problem.
Sorry, Donna, you were going to say something.
Well, I think that Cyril and Julian have said most of it. Just on the topic of exits and liquidity, and my world is early stage, 0 to 1. And this is a super challenging time, but I think that there are ways, with creative thinking, to try and create value along the way, right? So I'm thinking of a company that I'm helping now. They are a therapeutic platform company, and that it's very difficult to raise money for that in Singapore right now. But they have along the way, they will be building a data set which has value to other parties, right? So I've encouraged them to just think about creating other forms of value from assets that they're building that will be instrumental to their long-term vision. So I think we just now as founders have to be a lot more creative about how we are using the resources. I think you mentioned that in the communication earlier, and how to drive and create assets that can be monetized along the way.
Maybe one last comment I forgot. There's an X factor to everything I've said. Is defense industries are rising. There's going to be more and more money coming in from defense. Current world is a little bit more contentious than the one 10 years ago, and how much money will come in as a question. How comfortable entrepreneurs will be in working that, but it is something that is really coming on the horizon and quite different than maybe 5 years ago. So there's the build up there as well.
And I'll add up to that. That's obviously the market, is a far cry from 4 years ago. And so, it's not necessarily because of you, but VCs are extremely cautious in investing at the moment. Q1 was sort of the bottom that we've seen in the last couple of years. It got a little bit better in Q2 and perhaps in Q3, but it's not that great of a funding environment for anybody really, unless you are AI this or AI that. It's the Fed has moved a bit their interest rate, so that will create some consequences over the next years. But most of the round, I think you can be sure that most of the rounds will be still hard to come by, and most of the rounds will take longer to close as well. So you just have to be that more resilient, I think, over the next couple of years. It's not going to change drastically.
So if I can just maybe tie some of these together as well again, because obviously the Fed cut means that there will be potentially more capital that might become available, but at the same time there is potentially capital, like so for example in China, that's just not activated because no one wants to take the money, no one wants to invest in China because the economic environment is not great right now. Are there ways to, again, think of all this as, well, of course, here you say that there are defense industries, because once you have the defense industry, you worry about all this sort of like geopolitical issues as well. Are there ways for the deep tech companies to think about these issues that buys them some insurance, but also gives them options, as they go along in terms of who their customers or their markets might look like going forward? Any words of wisdom or advice for people thinking about this space?
Well, I was talking earlier with some of the companies, and unfortunately, we are in an environment where we have to pick a side, right? Now, Singapore has always been East meets West and straddling both sides.
Is that a, sort of like a strategic role that we can play, or it's not going to work?
No,
anyway?
we are playing. We are playing. I think we are playing that role. We have seen companies, even startups, big companies, domicile or bring operations to Singapore because of this. We'll call it neutrality. Yeah.
But does that pan out in your worlds as well? I'm just wondering whether that's actually.
I mean, it's
because we don't want to drink our own Kool-Aid and think that that's true if it's not true for some of the investors who are trying to look at the investability of these companies.
As an investor, we have to be clear about that. This is a very serious issue that we have concerns about. It clearly, as for example, me as a European fund, it concerns my ability right now to invest in China, not because of just the geopolitics. My main concern will be if I invest in a Chinese, and I have, by the way, just for everyone's reference, so I did my studies part of my studies in China, in Beijing University. I'm a Mandarin speaker. I work with quite a few Chinese entrepreneurs. Our best, most visible company is a company in autonomous mobility called WeRide, which is in the news. If you look right now, they'll be hopefully listing this year on NASDAQ in the US, which will be interesting itself. So I've been very supportive in supporting entrepreneurs in China. The biggest question I have now is, it's not so much about the geopolitics, is as a European fund, if I'm investing in a Chinese company, how do I exit it in 3 years? What does the landscape look like in 3 years for a European fund? Do I have to sell in panic because the Chinese government's put a new regulation that makes me no longer eligible as a shareholder? Have I invested in a company at the beginning was not in a sensitive sector? Autonomous was not, but when autonomous started collecting a lot of data, it became sensitive. So that's my main concern. It's not so much about, I can't project myself in 4 years' time in China right now. So that's my biggest issue.
I would also I have to add to this, because if you look what's happening with institutional funds, the large institutional pension funds, et cetera, even our own sovereign state-owned Temasek has pulled out largely out of China, right? So for deep tech companies, when you go around the world and you say, who's going to write the $100, $200 million check, right? I mean, that pool is shrinking by the day. So again, I think in terms of deep tech, I think we unfortunately do have to pick a side, right? So back to that. Because where are you going to get the next round of funding for your companies that are going into Series C and D?
Well, yeah, I mean,
right?
That's the issue. And even before that, as a European investing in deep tech, for example, in China, am I allowed? Will I still be able to continue? That's really a concern. So we're not taking sides from political. We're just from a very practical, as they say, and there's 1 minute left, so remember, venture is always what they call, it's this lingo that says a risk-adjusted return, right? So you gotta figure out what your risk is and where it is. And right now, if you're doing deep tech in China, the risk is high. The return might be high, but the adjusted return might not be. So, but Hacks is in China. So what are your thoughts?
I was interested to hear what's the experience and maybe what are some ways you manage that?
Yeah, I'd say more of the same. Just trying to, like entrepreneurs in China are generally fine. They continue to grow their business, and nothing has really changed there. So it's more as a foreigner, what's your ability to invest over there, actual money, and that's nowadays extremely difficult to almost impossible. Will more Chinese founders go to other places in the world, including Singapore? Yes, of course. Yeah, just that's the nature of entrepreneurship. And are they going to leverage their China base? Yes, as well. And so is China a market still? Yes, absolutely. So everybody will have to compose with all those things. I think Singapore, for that reason, is very exciting and interesting place. And so and also it's good to be thinking just about one, the business side of things, and then two, how do you use all the technologies that everybody's building here to generally advance the status of humans, right? I think is an important reason why we're investors, or I am at least. And so as long as things start to spread around, I'm fine with that.
Okay. So anyway, I know we're out of time. So anyway, I hope it's been an interesting discussion for everyone. What I can maybe quickly summarize to say that, well, Singapore is making some inroads. There's probably still a lot for us to think about in terms of how we help our deep tech founders really find markets, find the investability, and of course, maybe even help them to navigate the uncertainty going forward the next few years. But certainly, I think we'll look to people like you in the ecosystem to help us to find that way around a little bit as well, and maybe help us also figure out if there are things like blended financing and so on, which is part of what we need. Maybe we can always help to start a conversation with the government to ensure that some of these things become possible, but maybe to define what exactly is needed and what form it might take for it to actually be able to actually help the right people. One final thing I guess is that, yes, indeed, I think, as I think about it, yes, there are probably some rules on the Enterprise Singapore side which require some local ownership and so on before the funds are accessible. So that might be why some of the founders actually say they can't access it and they don't find that available. But that's something I think that if I understand people are thinking about right now to say whether is there other ways around it? Maybe the investor is actually quite based in Singapore, the founders don't need to be. Those are some possible ways of thinking about it, I think, going forward. But the whole idea was always, from the government's perspective, how do I make sure this non-dilutive funding didn't end up just growing a company that then completely left Singapore and nothing came back, and nothing sort of accrues back to us. We hope, of course, they'll come back because of all the linkages and so on. But I think it's always difficult for the government to just say, yes, I think it's going to happen, and then tell everyone that that's the case. But how to solve that? How to actually maybe build an ecosystem of trust. I still remember when I first went to the Silicon Valley to learn about the startup space. That was in 2015 when I first became the CEO of NRF. After I talked to all the people in the ecosystem, I concluded that the startup ecosystem is a mafia ecosystem. It is built on trust. It is built on people who you can rely on to make some assessments for you. And you bet on people as much as you bet on some of these things. And then when someone crosses you, you basically don't use them anymore, or you don't work with them anymore, right? But within that ecosystem of trust is then that network effect and the ability for that network to be really, really effective. But then how do we build that? I think would be something that would be interesting from Singapore's perspective, ensuring that we have some of the people who have those networks and bring those networks together, let it interact, and maybe then create more value for everyone in that process. So on that note, I'll end this very interesting talk. I hope you all have benefited as much as I have.
Ladies and gentlemen, round of applause. Thank you very much. Can we invite the panelists and our moderator for a photo-taking session? Yes, definitely. I think a lot of things to explore. I don't think we can actually cover it in such a short fireside chat. So for those of you who are interested to find out a little bit more, to engage in some discussions later on, do catch our panelists around and have a chat. Once again, thank you very much. Thank you. And with that, this sets the context for today's startup pitching, and we're excited to see our 11 startups and what they bring to the table later on. But before that, let's take 5 and freshen up before we hear from them. So do have a great break, and we'll see you in a bit.